Hi, good evening, friends. In this video, we will be talking about taxation of income from other sources for individuals, basically for salaried employees and individuals. So, in this video, we will be talking about various other sections, like, for example, deduction under Section 80 TTA, which is basically of interest income which an individual receives in a year, up to 10,000 is exempt. Now, also income on fixed deposits for senior citizens in a year has been increased to 50,000 rupees under Section 80 TTB. For example, if you are not in that tax bracket or you don't want to pay any TDS for that matter, which the banks deduct, then you have to submit your Form 15G, or for example, you can also submit your Form 15H. Now, apart from this, you need to also understand, excuse me, that there is something like family pension which somebody may receive on the demise of the earning member. So that family pension also is taxable. But then there is a rule which says up to 15,000 rupees received or one third, whichever is lower, that will be taken as the value for exempt and the remaining will be taxed as per the tax slab. Now, income from lottery, games, puzzles, and also like somebody's winning from KBC. So, if somebody is curious to understand how much is the tax, 30% flat tax. Now, coming to expenses or deductions, for example, if you are a freelancer and you're doing various activities, then obviously there are certain exempt incomes like depreciation. Of example, if you are running a factory, there's certain depreciation or certain items you can claim under Section 115O of the Income Tax Act, and also claim standard deduction and other benefits which are available under the law. Okay. Finally, I've noted down some other interesting things, like, for example, income from capital gains, because a lot of us are doing investing in shares, bonds, and other stuff. Now, what are capital assets? It could be anything. So, capital assets could be building, land, property, any form of shares, debentures which we buy. Now, they're not clubbed to the income like in the case of other heads. So, to give you an example, let's say we talk about shares. So if you buy shares and hold them for less than 1 year, you are taxed at 15%. This will be called short-term capital gain. If you hold them for more than 1 year and sell whatever is the profit, there will be long-term capital gain at 10%. Now, for example, if you're buying equity mutual fund, the same logic will apply. Now, if you're buying debt mutual funds, and here the law changes, it's you have to hold for 3 years, and if you hold the investment for 3 years, then the capital gain or the gain after selling them will be taxed at 20% with indexation benefit. So what does that mean? For example, if I have bought something worth 100 rupees and I'm selling at 130, then every year I will be given a benefit of inflation, so that 100 will become, let's say, 115. And if I'm selling it at 130, so then the tax of 20% will be calculated on 130 minus 115 and not 100. So that is how we get the benefit of indexation. So similarly, for property also, for more than 3 years, you have to hold the property for getting long-term benefits under the capital gains. So they will not be directly, uh, taxed as per the 30% or the maximum slab which is there. So this is some additional benefit which is available under income from capital gains. More details you can read in Google and find out. Okay. Now quickly, I will also be touching about tax from other business. Now let's say you are a entrepreneur, or also if you're salaried and also having a small business income from somewhere. So what will be the treatment for that business income? So if you're a sole proprietor, it'll be different. If you're a limited liability, if you're a private company, if you're a public limited company and running a show on those lines, then the tax will be different because the law is very complicated of taxation on each. And then you have to maintain a proper book of accounts, you have to maintain a tax audit, a regular GST has to be given, due dates for paying tax have been mentioned. So this broadly tries to give you a perspective on various other ways in which you have to be careful for various sources of income and how the tax liability will fall and where all you can save. I hope you liked this video, and thank you very much for watching this video. In the next video, I'll be talking in detail about all the sections under Section 80 of the Income Tax Act for claiming that benefit of 1,50,000, which will be very useful for everybody. Thank you very much.